Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is Thursday. It's September 8th. It's about 8:23 in the morning. I'm getting a little bit of a late start today. What can I say? And the market's going to open up in about an hour and 7 minutes, to be specific with you. Now, as you can see, the Nasdaq's down about a quarter of a point, about flat. Not much going on here. The Dow's up about 50. Very, very random action. Had a really good upside yesterday in the broad market. As far as Fed data, usually I have this a little bit prepared for you, but what can I say? We have Jerome Powell speaking today. That's going to be the big report for this week, and the jobless claims. Not much going on this week. We had international trades in goods and services, but jobless claims is the big report. But quite honestly, and I know the Fed likes to make a lot of things out of it, as long as we're within the 4-week moving average, we're doing okay. It's not going to be that bad. It'll be stable, and the numbers have been fairly on the level. Like last week, 232. So there hasn't really been any reason to be worried about that. But the big thing is Jerome Powell speaking. Now, we got to watch the bond market carefully. And I'm going to tell you right now, the market is being driven by the bond market substantially, a lot more than usual. So as you can see here, the bonds actually did break lower, but I anticipated this. I anticipated us to break a little lower and then start heading higher. I do believe we're going to go a little higher. I'm hoping we can at least get to the midpoint, to the 115 level on TLT, or maybe a little higher before I get to chance to sell them. I do want to sell bonds because the trend is lower, but I don't want to go against the trend. Now, you could see that there is a breakage, but we're seeing divergence. And divergence, notice this is going lower and this is going higher. The oscillator here, as price is lower here, the oscillator's higher here. Price is higher here than this, but oscillator's lower here. That's divergence. That's just telling us that price and oscillators are moving in a different direction. That's usually a sign for a short-term turnaround. So the market, the stock market, is cooperating so far, but I think we're going to go higher up here, which will put some relief from the bond market into the stock market. If you look at the put-to-call ratio, I just wanted to show you this. We've been going between 120, 100, but this is all oversold. These are all oversold markets. The market is not moving into overbought territory, which means there's a lot more firepower available for the market to move higher. We haven't got to the 80 level since June 7th, and we're right now at September 7th, and we're at 1. So we've got a lot more put buyers than call buyers, and if this market flips, it can really go higher. The put-to-call ratio gives you a ratio of put buying to call buying. And typically, what you want to see is you want to see the numbers. You want to see the numbers. Anything below these levels here, below the lower levels here, this is when the market gets really, really bullish, and this is when market gets bearish. And notice we've been sitting at the bearish line for quite some time. So we still got some firepower, and the fact that the bond market is starting to go higher is giving us some relief into the market from stocks. Let's talk a little bit about global economy. Oh yeah, by the way, I want to thank you for all the wonderful comments that you've been posting below these videos. The more comments you post, the more comments other people post, and the more comments people see, they benefit from it. There's questions there. I answer these comments. Please post comments below this video or send me an email, support@marketgeeks.com. I can't wait to hear from you. Good, bad, ugly, doesn't matter. Comments, feedback, very appreciative. I know who you are. All right, let's continue. So Thursday, investors are closely watching European Central Bank meetings and sought to juggle concerns about inflation and recession. I'm more concerned with Mr. Jerome. Let me see what I'm going to really do till after I get reappointed Powell speaking. Somewhat reassuring to the market watchers was Japan's revised seasonally adjusted GDP. The second quarter was revised upwards of 3.5% growth. That's way better than 2.2. Maybe we should be learning something from Japan and keeping our rates lower. Just saying. I actually don't believe that. I'm just being sarcastic. Data showed private consumption and business spending are holding up in the world's third largest economy, which has managed to grow for 3 straight quarters. They haven't been hit by COVID as bad as China, though. Investors are watching what may happen with interest rates at the central bank's meeting, as well as the comments from you-know-who that come later today in about 45 minutes. Markets' focus remains on higher inflation, highest inflation in decades, and the Fed's attempt to rein in higher rates. The U.S. central banks have already raised rates 4 times this year, and yes, they're expecting a couple of more whoppers. Don't be surprised if we get 2 more 0.75s. The central bank has been clear about its determination to continue raising rates until it feels that inflation is leveling off. In June, Fed officials projected that the benchmark rate will reach 3.25 to 3.5 by the end of the year, roughly a half percentage point more in 2023. And they're on target right now. I think they're at, 2.25 right now. So I think they're doing well. Energy is kind of, it's been kind of mixed. Now, let me show you something interesting. When we look at sectors, individual sectors, I want you guys to see this. Utilities rallying again. Energies looks like it's starting to come up. Consumer staples is really coming up, and it looks like it bottomed out here. Healthcare looks like it's ready to move higher. I like healthcare around these levels. Most importantly, look at communication services. It made a low right at the previous low and didn't go lower. Now, I want to show you something interesting. For those that don't think there's a big correlation between stocks and bonds, this is communication sector, and this is the bond market. I'm going to do this again. This is the communication service sector, and this is the bond market. Do you guys think there's a correlation? Do you guys see why I'm so focused on the bonds all the time? Huge, especially with tech, communication stocks, discretionary stocks. So the fact that this has bottomed and the fact that it's rallying along with bonds is a very, very good sign. Also is a really good sign. Let me just go here. Another really, really good sign is that it looks like a lot of the sectors here before yesterday have bottomed out. There was a lot of red here. And I was even commenting how the communication service sector, 15%, 19%. The real estate financial sector was really low. So there's a lot of stuff happening here. And a lot of these sectors are really cheap, like real estate, communication services, consumer discretionary. Midterm, they're not as cheap except for communication services. But I think we're going to start seeing some upside. I'm liking the industrial sector. I'd like to see a little more grounding there. But I'm really liking consumer staples, energy, and utilities, the 3 sectors that I liked the most before that. Now, looking at individual sectors, looking at them, now remember something. Tomorrow, I'm going to have a really, really, really cool sector rotation ETF, and I'll give you my number 1 sector. You don't want to miss out. There's going to be a link below this video. But one of the sectors that I'm starting to turn my attention to is the industrial sector. It's starting to move higher. And remember, the industrial sector is strongly determined by whether we have inflation or recession. Recession doesn't do well. Inflation, it does fine because we still need industrial spending during inflation. That's not going to change. But right now, the 3 sectors that you really want to focus on are utilities, energies, and consumer staples. And tomorrow, during my broadcast, I'm going to tell you which one I have my strongest feelings about, all right? Real strongest. And you may be surprised to find out which one it is. But come tomorrow, you'll find out. So don't miss out, and there's a link below this video. Now, before I let you go, I want to talk about something. If we look, I want to show you this. This is my CSI scan, and I was showing this to guys yesterday. Look at the top stocks right now. Occidental, Devon, CF Industrial, US Marathon, McKesson, Enphase, Apache, Marathon, Conoco, Valerio, Exxon, Mosaic. All energy, and utilities. Energy, utilities, and some consumer staples in here. As far as new stocks, EOG, ADM is back up. I really like that a lot. Cardinal Health, as I mentioned to you. SRE. But otherwise, like for example, Devon, Oxy, CF, MRO, ENPH, APA, MPH, ConocoPhillips, Valerio, Exxon, Mosaic, Hess. These have been up here for like 6-7 months. Let me go back 6 months ago. Devon, Marathon, Oxy, Apache. See, looks exactly the same. It's March 10th. I mean, look at this, almost identical. So we haven't, that's 124 days back. So we haven't had much of a change, and defensive stocks are still holding up. Now, and when you look at the bottom, don't look at Tesla. This is here because it just got split up. Not split up. The stock shares got they had a split. But look at all of these: Align, Netflix, PayPal, Dish. Remember Dish, Caesars, Royal Caribbean, Bed Bath and Body Works. All the crappy stocks that were in here are still the crappiest stocks. So you got to be very, very, very careful and very, very selective. Keep your eye on what Mr. Jerome, I won't tell you what I really think till I get reappointed, Powell says. Keep your eye on the bond market. I'm telling you right now, the biggest factor that's determining movement right now for at least the spec stocks, the communication stocks, the consumer stocks, is the bond market. Another major factor that you need to pay attention to is consumer discretionary. So far, consumer discretionary is starting to make a support out of the previous resistance. If this holds, this will be very, very powerful, but I'm not sure if it will. If bonds hold, this should hold. So you got to keep your eyes on the bond market right now, on the bond market and consumer discretionary. If they continue moving higher, it's very, very, very bullish for the overall market. The question is, will they continue doing so in the next few days? And tomorrow, oh boy, tomorrow I'm going to give you my top ETF. By the way, I didn't give you, so right now, one of the top ones is utilities. So let me give it to you. This is it right here. I love the utilities right now. I've been talking about it nonstop. It had a nice pullback. As far as the option on it, I would go all the way to December. 100 days to go. Historic volatility and implied volatility are not that far apart. It's at 77 right now. You can get this sucker probably, good open interest. Wait till the market opens, but you'll probably get it, the 77, 78. Go for one of these. You'll probably get it somewhere around anywhere between 350 and 250 for the 78 or 77. And start at the bid and work till you get to the order. And tomorrow I'm going to give you my number one ETF. You don't want to miss out. Follow the link below. Register for this. Now, I'm going to tell you this, folks. If you want my number one sector play, I urge you to join me Friday for an emergency meeting that I'm hosting at 1 p.m. Eastern Time. I expect the Fed to do something drastic soon, and it's likely to shake up financial markets and individual portfolios. But it's not too late to prepare, especially if you've got me on your side. I'm going to help you every step of the way, as I've been doing for the last decade now. It's been a long time since I've been at this. I'll cover how I construct portfolios that are built to handle shocks in the market, and they've been doing pretty good. Make sure to use this link below to register for Friday's event at 1 p.m. Eastern Time. Follow the link below. You want to check this out, and post some comments below this video. I love reading them. I want to hear what you got to say. Send me some questions. support@marketgeeks.com. And love letters. Bye, guys. Have a great day. And tomorrow is Friday. Bye.